So I just started recording this just right now. So SNPS, it just came up on our list. There's some unusual option buyers stepping in and buying the November 16th calls. You'll see that in the background right here. They're buying the November 16th. They're buying the 90, 95, 100 strike. You see all those there, and there's nothing basically on the put side. So they are buying. And why are they buying? Well, let's take a look, guys. And this is something that's important. If we're looking here, so we go back. What is it here? SNPS. Let's type in SNPS. And this is how we got here. So, as you can see right here, they won a large contract. Synopsys wins DARPA Electronics Resurgence Initiative contract for advanced emulation technology. No terms disclosed. That was on Wednesday, October 17th. And if we look here on the chart, and this is important, guys, I want you to put all this together. October 17th was right here. You see that day then? It had a nice incline. So right, they knew on this date right here on the 16th. It was released on the 17th, but there was insiders that knew. That's why you seen that big green candle there. So the 17th it was released that they won that contract. It held that 10-day pretty much. And now we see not only do we have a crossover on the MACD here, which is extremely important. You see each time it has that crossover. Look at back here. Every time that white line crosses above that red line, that's a MACD crossover. What happened? Here, it crossed over. What happened? Each one of these candles represent one day. What happened after we had that MACD crossover? After that, we had a climb from what? From $88 a share all the way up to $94 a share. So it had a 6-point move in how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trading days it had that 6-point move. That's incredible. And what did it do also during that time? It had a rising RSI, guys. Rising RSI. Now take a look. We have that MACD crossover, and we have that rising RSI. The RSI was even oversold. What else do we have? We have a catalyst here. We have a catalyst that just won a contract. That could be worth millions of dollars. That's why we're seeing that big candle here. Now what happened? They won that contract. It just crossed the SMAs. We have the bullish signs here. We have that MACD crossover. We have a rising RSI. What's going on now, guys? So we go back here. We look. Boom. What happens? So it just won that contract. Now it got upgraded. It got upgraded. JP Morgan has a price target of $98 a share. So you could bet your ass that we're going to see this continue to climb here. The banks are finally starting to upgrade it, and we're seeing some. Like I said, they won a contract. We have a crossover on the MACD, rising RSI. We just crossed above the SMAs here. That's a very bullish sign. Every time you cross above those SMAs there, that's momentum. And you see by the size of this candle. Look at the previous chart here. Look at these stocks. Okay, look at the candles. What happens when you have larger candles than usual? I want you to see and understand this. When you have small candles, these little body candles, it's not moving much, and it has no direction. When you get these big candles, what happens after that? Look at those rises you have. Look at this big candle. What happens? Rises. Look at here, another big candle. Rises. Big candle, rise. Look at it. I want you guys to correlate all these things together here. I'm trying to simplify it here for you guys. There's so much going on here, so many bullish. Everything's a checklist here. We have the oversold RSI that we're climbing from now. That's one check. That's a green check. We have a crossover the MACD, white above the red. That's a check. They just won a contract. That's a check. It just crossed above the SMAs. That's a check. It just got upgraded. That's a check. It just got a price target upgraded to $98. That's up to here. That's right here they're saying it's going to get up to. That's a check. And notice 98. What's 98, guys? And this is what those analysts are going to come back and say. They're going to say, hey, we called it, we upgraded it, and we had a price target of 98. Well, why do they have a price target of 98? That's that upper lend. Remember the previous video where I didn't know I was recording? You guys heard me. I said 94 first, 98 second. So they're going to the upper end of that target that I talked about in the last video. So 94 is first resistance, 98 is the second. They have a price target of 98, and we have every single bullish indicator going here for us. And it came up on the unusual options activity as well, like you could see here. Look at that open interest there. For SNPS, basically nothing on the put side. Then, guys, let's say this. Let's say you want to calculate if this stock gets to $98, where's it going to be at? This is going to be a class for the books right here. So this is going to be detailed. Let me get my thing out here, new piece of paper. So let's say we buy the 90 strike call. Okay, and you could write this down with me. We're going to buy the 90. We're going to buy the 90 strike call for November 16th Expo. Okay, and that right now is going for $3 and it last traded $3.64. Okay, actually it has a theoretical value of $3.85. So let's use $3.85, just so no one gives any problems about that. Okay, so $3.85. So obviously our break even is the strike price plus what we paid. So break even would be 90. That's our strike price plus what we paid, plus 3.85. So our break even is $93.85. Okay? That's our break even. Where do we have 100% return? At $3.85 higher than that. So at 97.70 we have a 100% return. Okay? Now let's say it gets up to $98. Let's say tomorrow or let's say in the next 3 days, let's say by Friday it gets up to $98. We could actually calculate how much this contract's going to be worth, this 90 strike call. I'm going to show you how to do that right now. All right? So we're going to use the Greeks for this. We're going to use the deltas and the thetas, and we're going to come up with what this option is going to be worth if it gets up to $98 by Friday. Okay? Let's do that. You know what? Let's do it. So if we get up to $98, so 98, that's our target. Where's it at now? 92.20. So 92.20. Let me get a calculator here. I'm going to need that for this. So 98 minus 92.2, so that's 5.8. So 5.80, that's our expected move. Now, what do? There's going to be a lot of mathematical calculations going on here. So like I said, get out a calculator, write this stuff down. So we want to calculate what's this going to be worth on Friday if the stock gets to $98 a share by Friday. Okay, this is going to be extremely detailed video here, guys. So please follow along here. I'll ask, you guys could ask questions at the end. So $98, that's our target. It's at 92.20 now. So that means $5.80 move we're looking for to get at that $98 by Friday. And this is just a hypothetical, guys, just if you wanted to be able to calculate how much a stock's going to be worth, or an option specifically is going to be worth a specific strike, a specific expo at a specific price by a certain date. And I'm going to show you guys how to do this. It's just calculations here. So like I said, 98 by Friday, we could figure out what this 90 strike call is going to be worth. So let's do it. So $5.8 is the expected, or that's the move that we need to get up to 98. Okay, and then we're going to use our delta and our thetas. Okay, so 5.8 we needed that, or we needed to climb by 5.8. So what we're going to do is delta multiplied by our target. So 5.8 move is our target. So delta times 5.8. Our delta in this case is 0.661. So 0.661, multiply that by 5.80. So 0.661 multiply that by 5.8. That comes out to $3.83.38. Okay, so 38338. Okay, so that means this option is going to increase by $3.83 if it gets up to $98, just using the delta. Okay, now let's say theta. We got to account for time decay. So delta means for every dollar the stock goes up, how much is this going to increase by? So right now it's worth $3.85 theoretically. Okay. So delta is, okay, if this stock went up $1 right now, this would increase by 65.3 cents. Okay? That's simple. That's all that means. Delta is for every dollar the stock goes up, that's how much this contract's going to increase by. All right? Now theta is time decay. Okay? That's extrinsic. Okay? That's what we're looking at here. Time decay. So what we have to do is, if we think it's going to get up, if we're trying to calculate for a certain date, in this case by Friday, what's today? I think today's Tuesday, right? So Wednesday, Thursday, Friday, that's 3 days. So we have to account for 3 days of time decay. How do we do that? That's simple. Theta multiplied by expected number of days. So here theta is 0.049. Multiply that by the number of days. So today's Tuesday. We won't count today. So Wednesday, Thursday, Friday times 3. So 0.049. Multiply that by 3. That's 0.15. So now go back to that number we said above there. That option was going to increase by $3.83.338. So 3.8338 minus 15 cents. So 3.8338 minus 0.15. So that's going to be an increase of $3.68.38. So this is saying now that that number we just came up with that equation, $3.68.38, okay? That means that if this stock increases by $5.80, so if this stock, SNPS, increases by $5.8 from now until Friday, we have a delta that's going to increase this premium by $3.83.38, and then time decay since 3 days multiplied by theta. So theta in this case is 0.049. The time until our expected date Friday, and this is just an example, guys, like I said. But if we expected this stock to get to 98 by Friday, our theta time decay is going to be 0.049. Multiply that by 3 since today's Tuesday. We're not going to count that since there's only an hour and a half left of the day. So Wednesday, Thursday, Friday, that's 3 days. 3 days multiplied by theta of 0.049 equals 0.14 something. So we'll use 0.15. So now we go back up to that delta calculation. Delta of 0.661, multiplied that by 5.8, expect to move to target. That equaled 3.8338. So we have that 3.8338 minus by 0.15 of theta time decay, and that comes up to $3.68.38. So then what we do is we take that number, 3.6838, and we add that to this theoretical value of 3.85. Okay, and this is going to come up with our number. So 3.6838 plus 3.85, 7.5338. So that's the number, guys, 7.5338. So we're saying that if SNPS got to $98 by Friday, and this is on Friday, if it got there sooner, it would be worth a little bit more. But if on Friday it was at $98, that means this strike here, this 90 strike call for November 16th Expo, that would be worth, it's worth $3.85 now, it would be worth $7.53. So $7.5338, divide that by 3.85, that's a 95.6831% return. So you see, it's just mathematical equations, guys. That's what we're solving here. It's mathematical equations. So you can see how we took the delta, which is the move for every dollar the stock goes up. We took delta, multiplied that by our target. So at the time, we got to make a trade on this. I'm here talking. What the hell am I doing here? Let's make a trade on this, guys. You see, though, that if it gets to $98, it's going to be worth, it's going to be a 95.68% return. Okay, let's go. Let's do this. If you guys aren't members yet, sign up for the Santarelli Exchange, www.santarelliexchange.com. Thanks, guys. Talk to you soon. I'll see you guys in the trade room. Let's make a trade on this. It just keeps rising, guys. Like you see, I talked about before how the candles just, the body of the candle just keeps climbing, climbing, climbing. We just had all checks checked off. We have a rising RSI, crossover the MACD. They just won a contract, and also it just got upgraded by the bank, and they changed the target to $98 a share, which was in the upper end of our video before I even seen that, 94 to 98. Those are two resistance levels. So let's go. Let's do a trade. Alrighty, guys. Take care. I'll see you in the trade room at santarelliexchange.com. Bye-bye.